Hey everyone, welcome back to the channel, your number one source for income-oriented investing, how to generate passive income from a diversified portfolio of high-yield funds. The stock market has been, a roller coaster ride in the last couple of months. If you look at that CNN fear index gauge, right now it's on fear. I'm filming this at the end of October, and I've actually seen extreme fear for a couple of times last week. So there is definitely some fear going on. I mean, I've been getting messages and emails and seeing some posts in our Facebook group that people are worried. So I figure it's a good time to make this video and really go through 10 reasons why I'm personally not worried at all as an income investor. So I'm not doing this video to show off or seem arrogant in any way, shape, or form, but really to hopefully, calm you down and gain some confidence by the end of the video. Because if you're an income investor like me, I'm sure a lot of these reasons will resonate, but it's very hard when you're just seeing your account value go down and stock prices go down, especially in Canada. Canada is having a harder time than the US, I think, right now. It's very focused on cyclical sectors like the financials and energy. The financials especially are having a bad time. The US side, it's not so bad. The technology sector is pretty strong still, and it's propping up the overall US economy, even though even the financials on the US side is doing bad. So what do you do in this situation? Well, let's go through the 10 reasons why I'm not worried at all. And hopefully by the end of it, you won't be either. So let's get to it. All right, everyone, 10 reasons why I couldn't care less and I'm not worried at all about the current volatility of the market. And if I could be frank as well, 10 reasons why I'm actually happy as well. So let's go through them one by one, and hopefully you'll resonate with some of these reasons here. I'm sure you will, especially if you're an income investor, covered call income investor like myself. So reason number one, because this is what always happens, everyone. Our economy is a boom and bust. I've spoken about this before. It's completely normal. It's expected. It's inevitable. It's actually kind of like a return to normalcy as I see it, because 2020 with the COVID, that was really a black swan event. So in case you didn't know, a black swan event is basically something out of the blue, unexpected event, right? So what's happening now with, are we going to have a recession? Are we already in a recession? I personally think we're already in one. They're just talking to keep scaring people, but I think we're definitely in one right now. Hard landing, soft landing, et cetera, et cetera. Interest rates have gone up. They're about 5% now. They've gone up rapidly. This is normal. This is a normal cycle, boom and bust cycle of events. What wasn't normal was 2020. That was a lot scarier for me because I had just sold my condo, invested everything in it. So this is, I'm not worried at all right now. This is just a normal, classic market cycle. Reason number two, because it's time like these where passive income investing shines. This is why, or reason why I invest this way. It's a defensive way because you still get paid every single month no matter what happens. Now there are exceptions, of course, the split share funds. In my case, just DGS is not paying right now. Maybe FTN will not pay. I wouldn't be surprised if it stops paying as well. But just, let's say those two stop paying, it only accounts for about 10% of my monthly income. So this is where PII shines. And I know a lot of you don't have any split funds and you really don't have this problem at all, right? So this is why we invested in PII in the first place. When there is market volatility, it doesn't make much of a difference. Whereas if you're a growth investor and you're seeing the market not really going anywhere, doing nothing, there is no plan B, right? You're not really getting much income. Another thing is that when there's volatility, it's easier to generate covered call premiums, higher premiums. So this is where PII shines. That's another reason why I'm not worried and why I'm happy. Reason number three, because I don't need to sell anything. Right, I just live off the income and I reinvest whatever I don't need. I reinvest more than half of my income if you include the RSPs, which I'm not touching, and just it's all reinvesting anyway. So when you don't need to sell anything, this is another advantage of income investing. If you're only living off your interest, there's no drawdown necessary, right? I don't envy growth investors that need to draw down or that draw down their units every month to live off of. I don't envy them, right, whatsoever. So this is another advantage, right? You don't have to sell. So if you're down, your account value is down, it's okay. You don't have to realize any of the damage or any of the losses. Remember, you're just looking at unrealized fantasy on paper declines and losses, right? You don't have to realize anything. but a lot of growth investors who are drawing down do because they don't make income, right? Next reason, reason number 4 is because I've been through it before. It was much worse. I'm talking about 2020. Like right now, my main portfolio is down about 18-20%. Back then, I was at one point down 35-40%, I think. And the main thing with this reason is I learned huge lessons in the last crash in 2020, adjusted, and I am in a much better position now. So in case you were with me at the beginning, you started a few years ago, I know this is the case for many of you. You're adjusting, right? You're adjusting your portfolio. So the main lessons I personally learned in 2020, and I have a video that goes through all the lessons, but really the main one that comes to mind is that I cannot trust single stocks, single REITs. They're the first ones who get their dividend cut, dividend reduced, but the covered call ETFs consistently pay outs, right? So I've streamlined my portfolio accordingly. I've reduced the split funds throughout the last 3 years. So it's when you're gonna learn your biggest lessons is really during the hard time, not the easy time. So it's just another time to learn and adjust and move on, right? So I'm learning all kinds of great things in this cycle. I'm actually going through a classic cycle where interest rates go up. I'm learning that when interest rates go up, and all of a sudden fixed income and GICs are attractive, people get out of dividend stocks, go into those instruments. So there's a lot of pressure on dividend stocks, and a lot of YouTubers are making videos of why are SCHD and these classic dividend ETFs are not doing well. I talked about it with Rob Lozon. Enbridge is going down. Why is Enbridge going down? Well, when interest rates go up, it does put pressure on stocks and dividend stocks because money flows out and new money goes into GICs, and so you're always going to learn and learn and learn during the bad times. So you learn, you adjust your portfolio to be in a better position the next time there's volatility. Next, the reason why I'm happy and I really couldn't care less is because I have no debt. I'm financially free. I got nothing to worry about. I know many of you don't have any debt, and you're not obliged to sell. You don't take margin. You're not going to be margin called. So life is much easier. There's much less worries when you're financially free, when you're out of debt. So this is always something that you need to strive for immediately. You have to get out of debt and become financially free. Another reason why I'm so happy and I don't care is because it happened so soon, right? The last time there was these really great deals, there was 2020. Of course, the crash. 2021 was great. 2022, there was a lot of great deals. Also, the market started going back up, so now it's going back down. So it already some sales so soon. It's great because I'm an investor who keeps buying every month. So for me, this volatility is always a good thing long term, right? So sales. It's always a great thing. Next reason why I'm really not worried, because nothing really has changed in my life whatsoever. Well, actually, nothing really. Nothing has changed in my life whatsoever. I'm still getting the same amount of income, just DGS, maybe FTN is the exception here. I've discussed it earlier, but nothing really has changed in my, so what, the account balance is down 10, 20, 15%, maybe you're down 20% as well. What is actually changing in your life besides you looking at the screen and just worrying and getting yourself anxious for no reason? Nothing has changed really. The reality is nothing has changed, especially for income investors, because we get that income every month. So that's another reason why I'm not worried at all. Another reason why I'm not worried, I think the Fed and I guess the Bank of Canada, the Fed is doing better. I think they're actually doing a good job. Everything is going as planned, as designed. They raise the interest rates. I commend them for raising them. I hope they raise them even a bit more, because now they actually have room to cut and to stimulate the economy when they have to. So this is really, we're going into more of a normal cycle. If you're a newer investor, a younger investor, you're used to 0% or very low interest rates the last 10 years. That's an anomaly. Now it's kind of normal, returning to normalcy. So this is why I'm happy. Everything seems normal again. 2020 wasn't normal. What's happening now is normal. I think the guy at the Fed, he's a no-nonsense guy. Jerome Powell, he's doing a great job. He's raising. And, even though the politicians are probably putting all kinds of pressure on him, even though the Fed is, Bank of Canada is a separate entity, has nothing to do with the government. It's a private institution, but come on, they're like Crick and Croc or whatever. So I think they're doing a good job. I think now they have room to cut, which is a good thing. Second last reason, because I'm diversified, right? Warren Buffett says it best: diversification is a hedge against ignorance. So when you're diversified, you have a little bit of everything. There's, yes, finance. Look at Canada, perfect example, right? The oil and gas producers have done well. Gold is doing fairly well. The financials are in the toilet. Technology is doing well. So when you're diversified, it's a hedge against ignorance. You're a little bit more protected than someone who goes all in on certain sectors, right? So diversification is king. It's good for defense. But it will give you, of course, average returns, which is why guys like Warren Buffett say it's best for most people, but he doesn't do that because these guys are always trying to outperform the market. Last but definitely not least, probably my favorite reason why I'm not worried and why I'm super happy, because I could buy cheap shares and cheap stock right now. And the longer the sale is, the better it is, right? My drips are firing away. I'm consistently buying every month. I always recommend for people to keep investing consistently. So if you're gonna invest consistently over time, would you rather buy expensive units or cheap units? Cheap units, right? You get higher yield, you get more growth potential. It's a win-win-win. So this is really why I'm super happy right now, because the sales are just going are through the roof. So I'm just gonna keep buying more and more and more. So I'll leave you with a I hope these reasons helped you, if in case you are worried, if you're a new investor, take it easy. This is normal. This is actually a normal market cycle, so I'm not worried at all. Another thing to remember, the market is always forward looking. So if they're talking about recession and this and that, market is looking 6 to 9 months ahead. So I think the market is already starting to how can I say that? Take into account the possibility that we're in a recession or that it's coming. Market is forward looking. So hopefully this was informative for you, and let me leave you with a very, very cool quote that I really, really like from this guy called Colin Rush. The stock market is the only market where things go on sale and the customers run out of the store. Genius quote. So don't be scared. Don't be a sheep like everyone else. Take advantage of the sales. Keep investing consistently. Keep buying. And I will be with you every step of the way. We're in this together for the long term. We are long-term investors. Don't forget that. So hopefully it was useful. Give me a thumbs up and see you next time. Hey, don't go yet. A few reminders before you leave. Did you know that I launched a YouTube loyalty membership program where for only $3 a month, you could become a PII Inner Circle member, where you will gain access to exclusive content, exclusive videos and live streams, as well as other perks and benefits, including a really cool weekly opportunity report. That's right. If you're interested, just click on the little join button next to the subscribe button to see what it's all about. Also, make sure to follow me on Blossom and download Blossom. It's a social investing app, which is really cool. You could share your portfolio, follow other people's portfolios, including my own. My username is Adrian_PII. So download it with the referral link below. Not only is it free, but you could actually earn cash by taking these really small, quick 1-minute courses. Really awesome. It's a no-brainer. Also, make sure to visit our website, PassiveIncomeInvesting.ca. That's where you could book a one-on-one private coaching session with yours truly, with myself, where you could ask me all the questions you want. All the information and booking information is on the website. Make sure to check out that video on the homepage there to see how to book a one-on-one properly. Also on my website, you could purchase my digital product, which I'm very proud of, the ultimate DIY investing package. This is a reference tool or a companion tool that will help you build your own portfolio. So it has lists of funds, it has sample portfolios, and it covers both the Canadian and US stock markets. And the good news is you'll only ever have to buy it once, because it comes with free lifetime updates. And my plan is really to update the version every single year. So make sure to pick it up. Also, I have Questrade and Passive referral links below. So Questrade is the broker that I personally use, and Passive is the broker companion tool or assistant that I use. Really cool program, really cool software. So I have referral links for both of those. Questrade, $50 of free trades. And Passive, I have half off for the elite membership. If you're interested in the elite membership, and even if you want to start out with the free membership and upgrade to the elite afterwards, use my referral code so you could still get that 50% off. And don't forget that the elite membership of Passive is 100% free if you use Questrade. For social media, we have a very successful and big Facebook group, private Facebook group with over 14,000 members where we all try to help each other out. So make sure to join that group. Information is below. We also have Instagram where you could follow us or more personal stuff when it comes to our life here in Panama. And there's LinkedIn as well. So as usual, everyone, how do I leave you? Continue to stay safe, stay healthy, and of course, stay passive. See you next time.